Who really controls your money? You might think it's the government, the president, or maybe Congress. But what if I told you the institution with the most power over your wallet wasn't elected, can't be fired by voters, and was created in a secret meeting over 100 years ago? This is the story of the Federal Reserve, the invisible engine that drives the American economy. It's the reason your rent goes up, your savings can shrink, and your job can disappear, all without a single vote being cast. To understand this, we need to go back to the early 1900s. America's financial system was a mess. Bank panics were common, wiping out people's life savings overnight. Then, in 1907, the whole system nearly collapsed. A massive banking crash destroyed fortunes and shuttered businesses. In the middle of this chaos, it wasn't the government that saved the day. It was one man, J.P. Morgan, the most powerful banker of his time. He used his personal wealth to bail out the U.S. economy. A private citizen saved the country. This crisis sent two clear signals. The government realized it had no control over its own financial system, and the bankers realized something even bigger. If they controlled the money, they controlled everything. So, in 1910, a secret meeting took place. 7 of the country's most powerful financiers took a private train to a remote location, Jekyll Island, off the coast of Georgia. In total secrecy, with no records kept, they drafted the blueprint for a new central bank. This plan would become the Federal Reserve. The public never voted on it. In 1930, the Federal Reserve Act was passed, and many politicians didn't even grasp what they were creating. Just like that, control over America's money shifted. The Fed was designed to be independent, shielded from political pressure. Its leaders serve long terms, so elections can't touch them. Their decisions are final. This independence was supposed to protect the economy from short-sighted political games. But independence is also a form of immense power, the kind that affects every single dollar you earn and spend. The Federal Reserve controls interest rates. That might sound boring, but it dictates whether your mortgage is affordable or impossible, whether your credit card debt spirals out of control, or if your small business can get a loan to survive. When the Fed raises rates, the economy slows down. When it cuts them, things speed up. A single decision made in a Washington boardroom can trigger a recession or pull us out of one, but it gets deeper. The Fed also controls the money supply itself. It can literally create billions of dollars with just a few keystrokes, pumping that new money into the banking system. It decides how much cash flows through the economy. And when you control the creation of money, you control everything tied to it. Jobs, wages, inflation, the stock market, housing prices, everything. This power exploded in 1971 when President Nixon took the US dollar off the gold standard. From that moment on, the dollar was no longer backed by anything physical like gold or silver. Its value was based purely on trust and, most importantly, on the management of the Federal Reserve. The Fed was now unleashed, with almost unlimited freedom to act. And with that freedom came unlimited consequences. From the 1980s onward, the Fed became America's economic firefighter. Every time a crisis hit, the Fed stepped in. The stock market crash? They cut interest rates. Housing crisis? They pumped the system full of money. A global pandemic? They created trillions of dollars out of thin air. Each rescue made the public feel safer, but it also made the entire system more dependent on the Fed. With every crisis, the Fed's power grew stronger and more centralized. But here's the twist they don't often talk about. The Fed doesn't work in a vacuum. It works closely with the largest banks in America, the very institutions that often contribute to the crises the Fed has to clean up. These banks benefit enormously when money is cheap and borrowing is easy. This creates a strange hybrid system, an institution with public responsibilities but heavy private influence. And this is where it directly impacts your life. When the Fed makes a decision, it's not just moving numbers on a screen, it's moving your future. When it raises interest rates to fight inflation, companies pause hiring, and layoffs often follow. Your credit card payments get bigger, your mortgage becomes more expensive, and your rent goes up. You feel the effects long before you understand the cause. Think about the last few years. Prices for groceries, gas, and housing shot through the roof. At first, the Fed said inflation was transitory. Then, as it hit a 40-year high, they were forced to slam on the brakes, raising interest rates at the fastest pace in decades. This made life even more expensive for millions of families. People blamed politicians, but the real driver of that economic pain was a group of unelected officials deciding the price of money. Now, this isn't a simple story of good versus evil. The Fed has arguably prevented depressions and saved the financial system from total collapse multiple times. But in doing so, it has created an economy that can't function without constant intervention. A world where money is created faster than value, and wealth inequality grows wider. This is because the system naturally pushes wealth upward. When the Fed creates new money, it doesn't go to you. It goes to the big banks first. They lend it to corporations and investors. By the time that money trickles down to the average person in the form of wages, prices for assets like stocks and houses have already been pushed higher. The rich get richer, not just by working harder, but because they own the assets that inflate in value first. It's like being the last person to get the new money after it has already lost some of its purchasing power. The Federal Reserve has become the single most powerful economic force on the planet. More powerful than Wall Street, Congress, or even the president. A few words from the Fed chairman can send global markets soaring or crashing. Entire countries hang on its decisions. Yet, most people can't even name a single person who runs it. These officials can alter the course of the global economy without ever asking for your vote or your opinion. So, what does this all mean? It means our economy is shaped by a force that operates beyond the reach of democracy. With every new crisis, the Fed's role becomes even more central, and our dependence on it grows. Some will argue this is a necessary shield against chaos. Others will say it's the source of the chaos itself. But one thing is undeniable. The Federal Reserve is far more than just a bank. It is the quiet architect of our economic reality, a story built in secrecy, defined by crisis, and powered by decisions that shape your life from behind a curtain you were never meant to see. Now that you know, you'll never look at a dollar bill the same way again. Thanks for watching. If you found this interesting, please like and subscribe for more content that pulls back the curtain.